little bit. It's going to be interesting to see what that means for the Fed when we finally get some Fed speak. But just quickly, Reed, let's talk about what we're going to get at 8:30 a.m. tomorrow. The August jobs report. What are people thinking?
So Jobs Day, always one of the most exciting days of the month. Economists are expecting for 170,000 jobs to be added in the month. And, that's another solid gain, but it's part of this gradual moderation that we've been seeing in the labor market and that the Federal Reserve wants to keep seeing. So you're seeing this moderation in job growth. You're seeing this moderation in wage growth. And meanwhile, you're seeing the unemployment rate stay near these historic lows. So it'll be interesting to see if we can continue to see that trend continue or if you see any kind of reacceleration in the months ahead. But for now, it's fitting that picture of a labor market that's coming more into balance.
All right, Reed, I really appreciate the preview. Our thanks to Bloomberg's Reed Pickert in D.C. And we want to keep this conversation going right now with Elise Gould. She is senior economist at the Economic Policy Institute, joining us now. And Elise, it's great to have you with us because it's just been an embarrassment of riches when we talk about labor market data this week. We had JOLTS, we had initial jobless claims. We're getting NFP tomorrow. When you boil it all down, and I know we don't have the NFP data in hand yet, but what does this say about where we stand in this labor market?
Well, I think it's still a very strong economy. The job openings data showed us that the job openings are coming down. That's more indicative of that great reshuffling slowing down a bit. I think we're expecting and will see and have seen for many months job growth well in excess of population growth. So not only are we keeping up with the population, we're also bringing in more workers month after month off the sidelines. Women's employment to population ratio is still strong. Expect to continue to see that be strong there. Wage growth, as you already mentioned, decelerating. Inflation falling faster than wage growth. So when we get the real wage numbers in a couple of weeks, I expect those to continue to rise so that living standards of workers and their families in this country will be better.
So Elise, the estimate is for about 170. What would cause the Fed to pause? And I don't mean pause its interest rate campaign. I just mean to pause and think that maybe there's something else going on in the economy.
Well, I think that those are the key measures to look at. So how fast is job growth? Is unemployment staying low? Is wage growth continuing to decelerate? Those would all be measures that should lead the Federal Reserve to pause. I think that would be important. I think we're also looking at where are there maybe canaries in the coal mine that can tell us that there is trouble ahead. For that, I would look at historically marginalized groups that tend to do poorly, more poorly, and maybe the signs of a recession coming. So we've been watching what's happening with Black unemployment, with Hispanic unemployment, what's happening with young workers, with workers with lower levels of formal education. Those would be the signs I'd be looking at to see whether or not there's trouble ahead. Again, many of those series are volatile, so we'd want to look at some longer term trends there.
Is it possible for the number to be too low tomorrow?
I don't expect it to be too low. I think that as long as we're above around 100,000, as I mentioned, we're going to be keeping up with population growth. We are approaching full employment. Those are all positive signs for workers and the labor market as a whole.
And Elise, I want to talk a little bit more about wage growth and what we're seeing there, because you've heard on the fringes some talk of maybe we're starting to approach a wage price spiral, the idea that if we keep getting wage growth levels around these levels, when we think about the path back to 2% inflation, that's not a sustainable dynamic. When you think about that debate, where do you fall?
Well, when you look at the data, inflation is falling steeply. So the rate of price growth has been falling steeply and wage growth has been decelerating, but not nearly as much as what we've seen for inflation. Again, that's why we're seeing some real wage growth here. But it's pretty clear that wage growth is moderating and that is coming down. Inflation is coming down. So those are not concerns that I have.